What's up, everyone? This is Stephen Hurd, founder of Hurd Homes Real Estate here in Orange County, California. And in this video, I want to talk about 6 ways to managing your money as a realtor. I got interested in doing this video because a real estate friend of mine asked me, how do you manage your money? Where do you put it? How do you divide it up each paycheck? How much do you save for taxes? And I started to break down the system and I thought, wow, I wonder how many real estate agents who kind of start in the business or maybe even advanced in the business really know a basic and simple system for managing their money, their business money. A lot of people know how to do it personally, but how do you do it for the business? So let's go ahead and talk about that right now. So step number 1 is you have to separate your personal and your business account. You see, when you see a lot of money in your account, when you open up your account and you see all your commissions in there and it's all in one pile, you're more likely to spend a lot more money because to you it looks like you have more, so it's going to encourage more spending behavior. So what I like to do is I separate my business and my personal accounts. And so I have Chase Banking for my personal account, and that pays my bills and my lifestyle expenses. And then I have Bank of America for my business account. And this is where my paychecks go. This is where my revenue share goes. This is where my tax money goes, all in that business account. And it's in a separate bank specifically, so I'm not tempted to look at the balances every day and kind of think I have more money than I do. So that's step number 1, separate personal and business. Step number 2 is get a business credit card. And so what I do is through my Bank of America, I have a business credit card and I put all of my business expenses on that credit card. For me, this makes for easy accounting because if I ever want to know how much money I spent on a monthly basis, I simply go to that credit card statement and I can see, what money was spent all in one place. I've made the mistake in the past of, having some expenses on personal, some expenses on business, some on a debit card. For me, it's just super easy to put it on a credit card, have it in one place, and not have to worry about it. Also, if you're able to get a business credit card that has travel rewards, then that's a really good thing too, because you're going to spend a lot. If you want to be successful in real estate, you're going to spend a lot of money. This year alone, I'll probably spend over $100,000 between marketing and operations. So why not get $100,000 worth of travel benefits and all that entails? So that's what I do. Put it on a business credit card. Step number 3, and actually this one kind of comes first, but it's boring, so I kind of put it in the middle, is decide if you're going to be an LLC or a sole proprietorship. An LLC is a limited liability company. The only advantage is not necessarily a tax advantage unless you have employees. The advantage is that if somebody were to sue you, they couldn't sue your personal assets. They could only sue the assets of the business. So it protects you and helps you with liability. In real estate, it's highly doubtful that our clients are going to sue us personally. They're more than likely going to sue the company, in which case our errors and omissions insurance should be helpful. We have, lawyers and attorneys on staff at most of our companies. So, if you're really worried about liability or if you have employees, then you're going to want to get an LLC so that you're protected in case of a lawsuit. What 99% of realtors starting out are going to do a sole proprietorship. That's literally where you just go to the bank and say, yeah, my real estate company's name is, Stephen Hurd Realtor or Stephen Hurd Real Estate and Associates, and I want to start a sole proprietorship. And they'll just say, okay, that's great. And then when you go to file your taxes, you file as a sole proprietor. You don't really need to fill out any additional paperwork like you do with an LLC. There's things you need to file with a CPA and stuff like that. So that's the simple way, sole proprietorship. And so now let's talk about step number 4, and this is how you divide up your money. So, the difference between a real estate agent who grows his business or her business and one that doesn't is how they invest the money they spend. Now, in the beginning of my career, I was really, really frugal. I didn't want to spend a single dollar on marketing or anything else because I was getting a lot of really bad coaching advice saying, hey, don't spend any money on marketing. Marketing doesn't work, right? And then I, of course, met with all the other top producing realtors here in Orange County and come to find out that's where they spend all their money is in marketing. And that's how they're successful is they market and they get new leads. So, lesson learned there. Only take advice from people currently selling real estate and currently successful. And this coach that I was listening to was successful in 1990, but not today. So step number 4 is how you divide up your money. Okay, so this is literally what I do when I get a paycheck. Now, these percentages are going to vary for you based on how much money you currently have. So the more money you have, some of these percentages are going to get a little bit higher. Or if you're starting off brand new with a new slate, some of these percentages are going to be lower. It could be as low as 1% or as high as 20%. So I'll just kind of break this down. But understand you need to develop the plan that's good for you and that's comfortable for you. So here's how you divide up your money. About 5 to 10% of every check I make is going to go toward generosity. That's where I'm trying to do something to bless my family, to bless others, or to give to my wife or to the people in my life that I love. Why do I do this? Well, for me, the purpose of business is to have an impact in the world. That's the purpose of my business. If my business couldn't have an impact in the world, I would just want to be an employee. I wouldn't want to go through all this hassle. It's really hard running a business. But I do it because I feel like I can have an impact on people with the income I make, the things I learn, and the people I meet. So about 5 to 10%, I'm going to throw right into generosity. Now, this is the mindset shift. Poor people and poor real estate agents pay their bills first and their taxes first. Rich people and rich real estate agents pay themselves first. So first thing I do when I get that paycheck, I'm taking it to generosity. Second thing I do is I'm putting it in my savings account. Okay, I want to have an emergency fund with at least 3 to 6 months of my household bills in an account for emergencies. So if the car breaks down, if somebody has to go to the hospital, emergencies happen. So I want to have money saved up for a rainy day. So about 5 to 10% to go into savings. My average paycheck is about $21,000, $17,000 to $21,000 in Orange County. So I'm going to put $1,700 to $2,100 in a savings account. So if you were to look in my bank account in Chase, you will see I have like 5 or 6 different accounts and they're labeled, Stephen's checking, Stephen's emergency savings, Stephen's investing. So I kind of divide it up that way and that helps keep me organized. So I put that right in savings. Then that helps me save for a nest egg. It also helps me save up for opportunities. Right now my wife and I have saved to purchase an investment home cash. The market is starting to shift a little bit. Interest rates are going up, and I'm starting to see a little bit of opportunity. So now that we have the cash, we're probably going to get a discount on the home that we buy. So that's why it's good to save up for a rainy day. The third thing I do is I put about 5 to 10% in an investing account. So this is where, I basically save up money just for investing opportunities. That's how we were able to save up cash for a home and other investing opportunities if I want to throw money into an IRA or stocks or whatever. Now, I don't decide that right off the bat. I'll look at that maybe once a month, but every check, I'll take, $1,700, $2,000, and I'll put it right into that investing checking account in my bank account so that money grows and I can invest it. The next thing I do, and this is where most agents make a mistake is they don't do this, is I invest back into the business. So now I'll put about 10% back into marketing or operations. So I'm investing back in the business. Why do I want to do that? Well, my job is to get leads. The way to get leads is to go out there and market for them. So why wouldn't I take a portion of every sale and dump it back into getting more sales? The return on investment is insane. If I do a client event and it costs me $2,500 and I make $21,000, can you see how that is just an insane return on investment? So I want to dump that money back into marketing. Then a little hack I learned a while ago is I take 3% and I invest it in personal development. This includes seminars, books, coaching services. So I take about 3% of what I earn and I dump it back into myself so that I can produce better things. Next is taxes. So after all that time I pay myself, now I want to get to the government, who we all know the more money we give them, the more they take from us, and they don't spend it wisely. If giving the government more money was a viable solution, the country would be rich. But how do they get into more and more debt when they get more tax revenue every year? You ever thought about that? So I don't want to give them money because I know they're not going to use it for good. But 20 to 30% in taxes, you got to do it. So every check, I make sure to put that in my business account, in my business tax savings, so that at the end of the year or quarterly, I have the amount of money or more saved up for my taxes. That's really important. I've known a lot of my good friends in real estate who got hit with a hefty tax bill, and it really kind of shocked them, or made them have to get out of the business for a little bit because they didn't plan for it. And then the remainder is what I spend on my lifestyle. Now, this is a whole other episode, but let me just tell you, my opinion is to live frugally for the first 5 to 7 years until you're making about $150,000 to $250,000 a year. That's when it's okay to maybe upgrade your car, upgrade your lifestyle a little bit, incrementally. But when you're in the beginning, if you're starting a new business, you don't know what your stable income is going to be, so you can't really make a sound financial decision. And I see a lot of real estate agents jump in and get a BMW and a Lexus and all this stuff, and it's great to look rich, but it's also cool to actually be rich or actually have some money, set aside for an emergency or to be generous, right? So you don't want to go broke trying to look rich. That's my point. So just be very careful in the beginning. Hustle your butt off, earn your stripes, then you buy the nice things. Okay, so that was number 4. That's how you divide up your money. That's probably the single biggest tip that I could give realtors is, if you divide your money up that way, you're going to have a really awesome life. You're going to have extra money, and you're going to feel like you can be generous to those that you love. And you're also going to have a growing business. Number 5 is you want to categorize and track your spending. Okay, categorize and track your spending. Now, if you were to look at my profit and loss statement, you would see it's really, really detailed and very complicated. Not what I want you guys to do, okay? Do not start complicated, start simple. You don't go to the gym for the first time in 5 years and start, with CrossFit. You start by the treadmill. You take baby steps, and that's exactly what you need to do with budgeting, because budgeting is really just not a talent for most people, right? Unless you're kind of analytical, it's probably something that's not very fun for you. So don't complicate it, make it fun. So I would recommend putting 2 categories. So this is why I put all my expenses on a business credit card. I take all those expenses and I have my assistant put them on a spreadsheet. And then I would categorize them in 2 things, marketing or operations. Marketing, did I spend the money to make money? Is it something that makes me money, like a Facebook ad or a client event or food at an open house or a client lunch? Or was it operations? Was this, this podcasting thing that I bought? Was it a computer? Was it my CRM? Was it something that was business operations, right? So I just categorize that, and then, that helps me see where my money is going and how much I'm spending on marketing and operations. Number 6, and this is the final tip, review your spending monthly and reflect. So now that I've tallied it all up and I looked at my marketing and I looked at my operations, now I want to ask myself 3 questions. Where is my greatest return? Where is my money making me money? That's how you know if you're getting a good return. Pretty simple. Number 2, where is my lowest return? Where am I spending money consistently and not making any money? I'll give you a great example. I spent a lot of money on cold calling services and expired listing services and for sale by owner services. And yes, I got a couple listings from them, and I enjoyed it and I was good at it. But it's something that eventually I became to really hate. I didn't like calling expired listings. And so because I hated it so much, I stopped getting good results in that area. And I really determined for myself, this isn't a way that I want to do business. This is not the herd way of doing business, is by, cold calling people every morning. And so when I made that shift, I stopped seeing a return on my investment. So I had to cut that expired listing service. So where's my greatest return? Where's my lowest return? Lastly, where could I spend this money to generate more clients? So, right now I'm dealing with this where we just made a couple paychecks and I have some money to invest in marketing. And now I'm thinking, where can I spend money to make more money? And so my wife and I are talking. We're like, should we have a party at the house and invite our past clients? Should we do a movie day at the park? What should we do to generate more money or generate more clients? So that's where I want it. That's where it goes back to investing back into the business. So we went over how to manage your money as a realtor. This is a bit of a longer episode than usual, but I feel like it has a lot of good, valid advice. Hope you enjoyed this. Thank you guys so much for listening, and have a great day.